Hey folks, it's Vic here with your weekly trade example for the week ending January the 27th, 2012. And this week I want to just talk to you or reiterate to you the idea of going for the easy trades. And by the easy trades, I mean the ones that you see easily, the ones that you see in your sleep. Okay, that's what you want to do. Don't try to do everything, and I'll just show you what I'm talking about here. You see all these levels I've got marked off here. These are support resistance levels that I'm looking at. I pay very close attention to them. In fact, yesterday on the 26th, I kind of felt that with this candle action here that we're going to go down today. However, do I start trading short? No, I only trade short if I have a technical pattern to do so, especially when I got the market flow going up and so on. In fact, actually right now we're watching this level, which is kind of interesting. If you look at the Fibonacci retracements from, I just zoom this out a little bit, from this high, it's a pretty significant high, right? Down to the low. We are very, very close to this 38% retracement level. So I'd keep an eye on that, guys, just see what happens. Now, what happens in this case here today is that it came down and retested this level down here again, okay, this bottom level. And on the 4-hour chart, you can see it better. This is what I'm talking about, going for the easy ones. This is an easy level, I hope to see, and if it's not, then you'll learn as you do this more and more. And because when price hits these key levels like here and here, it tries it again here and goes down. Like, there's patterns that set up in here. These are the ones that we show in the recurring forex patterns course, and that's the whole theme of it. Is like, find something that you know really well and just trade that. Don't try to be the jack of all trades and a master of none, or whatever that is. When it came down here yesterday, by the way, here's something else that's important. The reason we created that course was because we had so many people asking us about short-term trading, like day trading, in any session, because they're not necessarily available for any particular session, because people are all over the world, right? So that's why this course came out. I mean, these patterns happen, I mean, virtually every single day there's trades. Okay, now, and I'm telling you, if you want to start zeroing in on a trading technique and a trading approach where you can get frequent trades and good reliable trades, just take a look at that, because they really are pretty darn good trades, I'll tell you. Comes down to support. What are we going to do? Buy or sell here? Well, look, we're going to be careful here because we're at a support level and we're in an uptrend here, aren't we? So what I need to see now is I need to see a pattern that I recognize. And here's a London session pattern, okay? These happen in every session, I'm telling you. So here's what's happening in the London session. Price is going down. Well, remember this level down here. This is 130 on the 4-hour chart, about 130.70, 75, okay? What's happening on the 15-minute chart? We hit this level, and price does this. It bounces up, and look at the price is going down, but the MACD is going up. This is called positive divergence to price. It's like an inverted head and shoulders, with the head being here, left shoulder and right shoulder. And you want to buy it the way we show in our course. We'd look to buy this at 130.85, which was right in here. Depending how you handle this, and how you read the conditions of the market, which is super important, and we go over that thoroughly too, because it can make a real big difference in your trading. Just knowing when to hold them for a higher move, or when to fold them because everything's looking negative. And in this case here, we had some indications that things were going to come in stronger today, and so we had all this jumping up and down in here. But depending again how you manage your risk and all that, this had a lot of potential in it. It's okay to take some profit up here at these highs, and if you're going to hang on for the bigger move because of the conditions, the question is, where do I take my profit on the way up? Generally speaking, the answer is when you see resistance. And on a 1-hour chart, what happened is it went up. This is a place where you can expect resistance, isn't it? Right here, it used to be support. It's the M4 daily pivot, 131.45. The buy on this was at 130.85. That's a 60 pip profit. By the way, the risk on that thing, I mean, to put your stop loss underneath here, you needed 10 pips. Now, I'd give it at least 15 pips on a trade like on a pair like the euro US dollar, because of the volatility of that pair right now, which is something you should know how to measure as well. And but on the 1-hour chart, it would make sense to take profit up here. So just move that ahead, and that's what happened. And then it did what? It went straight down into the New York session. This now we had a nice trade in the London session. This comes into New York session, and we have another beautiful trade setting up. That's one of the most frequent patterns that we have in the course. And the buy on this one's at the figure 131, always an important level. Look at the support that used to be back here at this level here, and Again, assessing the market conditions in the environment, this is a place that you want to look to buy. Now, we have no idea if it's going to stop here or not, but believe me, this is where you want to buy, right here, and you want your stop. You get about a 20 pip risk on this, and it could go straight through and stop you out, right? It could do, but the odds are with this kind of a trade that it's going to stop and bounce for you. And did it ever? And it went straight up here with a 20 pip risk, depending again on. See, you got to. Everybody gets different results. I mean, if I say take a 20 pip profit or take a 50 pip profit, I don't. I'll tell that to 10 different people, and they'll all do it differently. I mean, it's amazing. So there are some very logical places to take profit. You're looking at 70 to 80 pips of profit on this trade with a 20 pip risk. Well, that's 3 or 4 to 1. That's extremely good. Okay. So again, the point is this: go for the easy trades. When look at where you can expect there to be support or resistance, and look for trade patterns at those levels. All this stuff in between here, don't get too hung up on it. Okay, all this in here, you got to see it hit a level first, a key level, and then go, okay, what's going on? What's the conditions of the market doing right now? What are the other currency pairs doing that are correlated with this pair? Is there anything I can learn from this or be aware of that would help me with this trade to be profitable on, or to give myself a good odds trade? And that's exactly the kind of stuff that we cover. But and having a trading plan, what you're going to do each day, super duper important. And all that, we actually include a trading plan for you as well. But I'm sorry, I'm aware I feel a little bit, I don't mean to be just plugging the course here like that. You can have other ways of trade too, and use the same concepts, okay? But find something that works for you, that's an easy setup for you, that you see really easy, and commit yourself to that, and just do it over and over again. That's just the way to do it, and it'll make your life a whole lot easier. Forget about the trades that you don't get or the moves that you don't get. That's for somebody else. You do your thing, stay with it, and you're going to have some success with this. But jumping around from one thing to another is not going to do it. So if I can help you with anything, let me know. I'd love to do that. And in the meantime, you guys have a great weekend and week ahead, and we'll be back again next week with another weekly trade example for you. See you then.